Welcome to this week's weekly market update, video update with Market Matters. It's Wednesday, the 22nd of September. Markets have taken a bit of a hit the last few sessions, James. Futures were pointing to a very dire day yesterday before rallying out of about the 7,200 level. Is this something more sinister, James, or just a bit of turbulence in September?
Yeah, morning to you, Harry. It was obviously a pretty rough last week. So I think the market's down about 2.5% since this time last week when we spoke. Commodities have been probably the major drag on the market, or they have been the major drag on the market. You know, concerns about China and what they're doing with iron ore prices and large property developers about to go bust, etc. To me, it's probably just more of the market's backfilling why. Well, the media is backfilling why the market's been soft. So, we're in September. It's traditionally a weak period for markets. We saw yesterday, which I thought was a really strong session yesterday. Obviously, we rallied about 90 points from the lows yesterday. So to me, that's a meaningful low. I think we've probably seen the low in September for now. So it bounced off the index level. The ASX 200 bounced off 7,200 really nicely yesterday, and we're having a pretty stable session today. So I think we've seen the low. I think it's obviously been a pretty aggressive move out of commodities, but I wouldn't let that shake our opinion around commodities at this point in time. So no, we're remaining bullish, Harry.
Yeah, definitely. We spoke a lot about commodities last week, particularly around the uranium names and sort of the more ritzy end of the curve, I'd say, in the commodity spectrum. Like you made mention there, commodities, we're not getting shaken out here. Are we going to add to those positions in the next few sessions?
So yeah, it depends on what commodities we're talking about. So obviously last week we spoke about the lithium names, uranium. We spoke about copper. We touched on iron ore. So and coal. So those the lithium, uranium, copper, coal, etc. is remaining bullish there. Iron ore is more than halved. So I think the market now is positioning very negatively, bearishly towards iron ore. We've seen a string of broker downgrades. Our own Peter O'Connor downgraded iron ore expectations, price forecast yesterday. UBS did it the day before. We've seen another couple of bulge brackets downgrade prices. I just want to stress just around that is that there's nothing predictive about those downgrades. So they're basically reacting to what the market has already done. So when commodity prices drop, analysts then revise earnings lower based on those falling commodity prices. So it's not a predictive mechanism. So, when the street moves on something like iron ore, like it has this week, and it's moved pretty strongly against the likes of Fortescue, Rio and the like, then they're not being necessarily predictive. So I guess I'm saying take that with a grain of salt. But again, if we didn't have, so our positioning in the flagship growth portfolio is very skewed towards BHP. We've got 9% of that portfolio in BHP. It's done really well for us, but it sort of left us hamstrung with an inability to add to that area of the market into weakness. So if we didn't have that position, we would have, Harry, but we do, so we didn't.
That's exactly right, James. They call that begrudging downgrades when the commodity moves or below where analysts are expecting there, James. I guess that's all for today. Good wrap up, nice, short and sharp. I think stay the course. Market's looking a little bit more supportive today as well. So good time to be buying equities.
Yeah, I think it is, and we've written a number of times in reports in the last, this week and in weeks gone, just about that weakness that typically plays out in September. So we're down 4% from the highs. If I go back, and I wrote it in a report this week and just cited the Septembers that have fallen by that magnitude over the last 10 years, it's pretty common. And what often pays dividends is stepping up and doing what feels probably uncomfortable at the time and buying into that September weakness. So I guess we moved into this period, probably didn't have enough cash on board, happy with the positioning we've got right across portfolios. But I guess not being shaken out is one thing. Adding to positions in this sort of market is what you want to be doing. So we're well and truly of the belief that the back end of the year is going to be better. And these short-term hiccups that the market has, whether it's Evergrande, whether it's US debt ceilings, whatever the media latch onto, that's not going to be a major issue for the market. The major issue for the market is a reduction in liquidity, sharply higher interest rates, or the like, and that's what we need to be really focused on. For now, that all remains accommodative, which is positive, Harry. So thanks for the update, mate. Catch up again next week.
Good to see your face, Jimmy.
You too, mate. Bye.